Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. Buy now, pay later operators are gearing up for regulation, with Treasury releasing an options paper outlining what the future looks like for the sector. It's a sector that's grown very quickly over the past decade or so, but it's come with some growing pains. Share prices have dropped recently and a whole range of issues have been raised with Treasury. These include allegations about unaffordable lending practices, excessive fees, poor complaints handling and non-participation in the credit reporting framework, making credit checks by other lenders difficult. With this in mind, Treasury has now put forward three options for regulatory intervention. The first, strengthening the buy now, pay later industry code plus an affordability test. The second, limited regulation under the Credit Act, requiring providers to have an Australian credit licence and have modified responsible lending obligations. Or the third, the all-in-one, is regulation of buy now, pay later under the Credit Act, with the responsible lending obligations in the Credit Act being applied to all buy now, pay later credit providers. A lot in that. I wanted to speak to one of the main operators in Australia to find out what the appetite is like for greater regulation and which of these options probably suit best. Cynthia Scott is the Managing Director, Australia New Zealand at Zipco. Cynthia, welcome to Fear and Greed.
Thanks, Sean. It's great to be here.
You've had a very busy 24 hours, I would imagine.
We have indeed had a busy 24 hours. This is a really important topic and we're pleased to be talking about it.
Look, Zip has always been pretty upfront about supporting regulation. Some of your competitors haven't been quite so upfront about it, but it needs to be fit for purpose, is your argument. What does fit for purpose look like?
Yeah, no, that's right, Sean. So we firmly believe that the buy now, pay later industry is ready for regulation. And in fact, we've been working with Treasury over the last couple of months, and we endorse any changes that are proposed from a regulatory perspective that will give consumers greater confidence when they use these products. The thing is that what separates Zip from others in the industry, and as you point out, we do have a slightly different perspective on this from other participants, is that we've already operated, and we have since 2013, operated above the minimum standards required. So we fully do support further regulation of the industry.
Of these options, the first one, strengthening the buy now, pay later industry code plus an affordability test, is fairly light on. The third one, which is basically being regulated under the Credit Act and sort of responsible lending obligations being applied to all buy now, pay later credit. Is there one or other you'd prefer? Is the middle one the way to go? What do you think? Because the Treasury yesterday was quite clear that he was thinking more about the latter, the regulation area.
Yeah, no, that's right. Well, from our perspective, given our operating procedures are already consistent largely with all three, we would be in a position to continue to operate our business whether option 1, 2 or 3 is chosen by Treasury. As you say, option 1 is really just a small extension of the current industry code of practice that we signed up to in 2021, and it would just be bringing that into force with some more regulation. But I think realistically, certainly from Zip's perspective, we would support greater regulation than that. So requiring that all buy now, pay later participants hold an Australian credit licence and conduct credit checks and conduct affordability assessments, as you mentioned, is something that we've been quite vocal about supporting since, really since we've been in business, but particularly since the Senate inquiry into regulation in 2019.
Okay, so you've been following that process. In a sense, is the point that if Zipco's doing it, it's fine, but what this will do is weed out some of the lesser operators, for want of a better term?
Well, I think what separates Zip, as you said, Sean, is that we have been operating in this manner since 2013, and that's because our first product in market was Zip Money, which is a fully regulated product under the NCCPA, and under our requirements of that product, we do conduct identity checks and affordability checks and credit assessments. So when we established Zip Pay, which is our buy now, pay later like product, it's not a pay in full, but it doesn't charge customers any interest, so it is considered a buy now, pay later. When we established that product, we used almost identical processes and procedures for acquiring customers and assessing credit. So we do conduct identity checks and credit checks and affordability assessments. And so from our perspective, we've been operating for nearly 10 years above the minimum required standard. So, we have evidence that it is absolutely possible to have a sustainable business model with this level of consumer protection. And given that the industry is now really maturing and the product is maturing, and there's millions of customers using this product, we do think that the time's right to actually regulate the product more broadly across the industry.
Stay with me, Cynthia. We'll be back in a minute. I'm speaking to Cynthia Scott, Managing Director, Australia New Zealand at Zipco. Okay, so if we have regulation, how many other operators do you think would fit under the Credit Act as they operate today?
Well, I can't speak for, I think, as I understand it, there's about 20 providers of buy now, pay later credit products or buy now, pay later products in Australia. As far as I'm aware, we have an Australian credit license for our Zip Money product, and we made the decision to operate our Zip Pay product in a similar manner, but I'm not aware of others who are operating in the same way. So the provision of credit checks and affordability assessments is something that we really strongly believe that the industry should do. So the uplift required from our perspective is not large, but I acknowledge that for others, it would require a change to their operating procedures and in some cases their business models as well.
Okay, other jurisdictions are talking about regulating buy now, pay later. The UK, New Zealand are both examples. Is it because you operate internationally? Is it the sort of thing where it would actually be quite good if they all got together and so you didn't have two different regimes in different jurisdictions? It's going to be somewhat different, but wouldn't it be helpful if those regimes kind of work together?
Well, I think the way to think about this is that buy now, pay later as an innovation in financial services started in Australia, and therefore we've been operating this product for the longest globally. And so it is logical that the Australian market would take the lead when it comes to regulation of the product and consumer protections, because the market has already grown and matured over the last 10 years. You're right, the UK, New Zealand and the US are also looking at the regulatory environment and how they should regulate the products. But I will say there are differences in the products, the way the products are constructed from Zip's perspective in Australia versus products in New Zealand and the UK and the US, for example. So there will always be nuances depending on the geography, but I think consistency of regulation globally certainly makes sense, and that's something that we've seen in other industries, so it would be something that we would certainly support.
What's the consultation process been like with Treasury during this?
So we've been actively involved with Treasury for some months now. So Treasury were very proactive in approaching the major participants and seeking our feedback. So we've had a very strong working relationship with Treasury over the last few months, and we'll of course be providing a submission in response to this options paper over the next couple of weeks. But as I said at the outset, our perspective is really that regulation that protects consumers is good, and regulation that gives consumers greater confidence in using these products that we know that they love is a positive thing. So from our perspective, we'll be giving our feedback on the three options, and we look forward to the outcome early next year.
As a product, it's gotten a bit of a bad rap in more recent times. I think it was ASIC. I may be wrong on that, but they had a survey that said about 1 in 5 buy now, pay later customers said they had to cut back or go without essentials to make repayments. Is that typical of what you're seeing, or is that typical of the industry as a whole?
See, here again, Sean, I think this is what separates Zip, because we do credit checks and we do affordability assessments. So 90% of our customers link their banks, which means we can actually see their transactional data. So for all customers who make an application to Zip, we can see their income, we can see their expenses, whether they've got other credit products, credit cards, other buy now, pay laters, etc. And so we haven't seen evidence of those statistics that you're referring to in terms of late payments and also people going without. Our customers certainly love using Zip products for everyday purchases and to balance their expenses and smooth their budgets over time. But I will say again, I think because we are perhaps more rigorous around our credit assessment, I acknowledge that our approval rates would be lower than our peers or lower than our competitors, but that's something that we're very comfortable with. So if from our perspective, if a customer applies for an account with Zip and we don't think that they've got the ability to afford to repay, then we will decline them. So as a result, through the course of this year, our rates of declining customers has increased, and that's something that we're comfortable with.
Okay. Where does the buy now, pay later sector end up in 5 years' time? So let's say we do get increased regulation. We obviously have the sale of Afterpay to Block. You are another one of the big providers. You said there were 20 buy now, pay later operators in this country, far too many to be sustainable. No one's going to argue that, I don't think. But where do you think we do end up in 5 years' time? And, I'm kind of interested in your take, because I always think of buy now, pay later as a competitor to a credit card or something like that. Is that where it continues to flow? How do you think it evolves?
That's a good question. I think that regulation is actually going to provide, even greater demand for buy now, pay later products, because we know that consumers are looking for fair and transparent ways and flexible ways to make payments, to transact and to balance their budget. So we actually think that providing stronger guardrails for consumers will increase demand for buy now, pay later. We know from the research that we've done and that we've seen that 48% of buy now, pay later users don't have a credit card. They actively don't. They don't want to take on credit where they are, are at risk of having to pay interest. And so there is real demand in Australia for buy now, pay later. So actually, I think over the next 5 years, we're likely to see buy now, pay later really embedded as a credit product of choice for many consumers.
With fewer players, do you think?
I think any industry that's got 20 players is open for consolidation, without a doubt. Yes.
Fair enough. Cynthia, thank you for talking to Fear and Greed.
Thank you. My pleasure.
That was Cynthia Scott, Managing Director, Australia, New Zealand at Zipco. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.